Hello guys, welcome once again to Trive's monthly webinar. I'm joined here by my colleague Odwa and Shaun. I am Shaun. We are the senior sales traders here at Trive, and today we'll be discussing, the outcome of elections and potential elections that are coming through, and just discussing how that's affecting, major indices starting from a local perspective here in South Africa.
Cool. So, local elections, as this year has started out, it's been the main focus. A large population of the world is going through some elections, bringing it home. We had some stressful times. We had our elections on the 29th of April. Only now we've only announced or inaugurating the president, and we've had some interesting things that's happened. So, for example, let's look at the Rand.
All right, so just before I touch into the Rand, right, I think just zoning into that topic of the elections, it's been interesting, unprecedented since the first elections in democratic elections in 1994. We are seeing that we are having a government of national unity and quite an unknown landscape post 1994. We're seeing that the ANC is basically joining up with the DA, the IFP, and other smaller parties such as the Patriotic Alliance and Good, and so on and so forth. And before elections, we had already thought that there was going to be a lot of volatility, as this would be the first time the ANC was going to lose their majority in the history of our democracy. And what has actually happened is that, with the government of national unity that has been announced, we are seeing the markets are reacting quite positively to that. So, we're looking at the Rand today, it actually broke the 18 Rand mark. It's just, at least at the time of this recording, it's just under that, I think it's trading around 17.96 to the dollar. Is that because a lot of people are investing into South Africa, or let's call it risk-on sentiment in South Africa, based on the coalition, which is seemingly, at least to the market, is a market-friendly coalition. We are seeing potential continuity in policy, and the market is always very afraid of any radical changes, right? Hence, consistency, having Cyril Ramaphosa still be the president is doing really well from a Rand perspective. Just zoning more into the Rand, it's important that I do also touch on what's been happening in the United States. I see that CPI cooled. I think that was last week, if I'm not mistaken. I see that there was also an FOMC meeting where the Fed is seemingly not going to cut any rates. Maybe there's one potential rate cut this year. However, the market sentiment believes that could just all be talk, because the numbers are showing the interest rates and CPI cooling. Even the job market is starting to cool in the US. So there is a knock-on effect on the Rand-dollar exchange to South Africa at this point in time.
Well, that's good. I do think, as you said, the Rand is strengthening, and as you rightfully said as well, more stability is what we're seeing with this GNU, especially on the South African front, and that's, I believe, the reasoning behind everything. Not only the Rand doing well, actually, I also saw that all-time highs for the JSE All-Share Index.
100%. I think the JSE has just reached 81,000 points, if I'm not mistaken there. And it's really good to see, especially as people that are sitting here in South Africa. It is one of the first, I think I read somewhere that it is one of the first few times where the JSE is actually reacting to local news as opposed to international news, right? For the most part, if you notice how the Aussie performs, it is led by US markets, and then it follows on. From our perspective, we are seeing, as much as there has been tough times, so times of high interest rates, high inflation, debt default, etc., we have been seeing the retail industry is doing quite well. We're seeing quite a bounce back in the commodities industry. We are seeing the banking industry is also doing quite well. I think yesterday, the JSE had one of its strongest rallies in a while, jumping up by 3.8%. And a big part of that was actually driven by the financial sector, which had a 6.71% jump, which really drove, the local bourse. And as we say, there's also a term that I learned called hot money. So hot money, basically what they mean by that is that people are now piling their cash into the JSE, investing some more, going back onto that risk-on sentiment. However, the issue with hot money is that investors and traders at large are always looking to put in their money where there is some form of stability, there is some form of good news. However, we are still in that uncertain political landscape. I mean, we haven't had an official cabinet announced. We do not know, who's going to be in the main speaking areas would be, the finance ministry, the SOEs, public infrastructure industry ministry. We don't know how that will unfold. So for now, everything looks quite positive. It looks like everyone is in agreement, and it'll be good to see, or very interesting to watch exactly what this looks like 6 months down the line. Are we all aligned from an economic policy point of view? Are we still seeing positive words, positive sentiment coming into the market? And in my opinion, as much as it is good, I would always look at it from a short-term rally until everything actually unfolds and everything is set in stone.
So right now it's just sentiment which is driving all this positive action.
Yeah, I think it's a lot of sentiment that's driving all this positive action, and that sentiment is really not isolated to South Africa. We are also seeing that there is, political volatility in international countries or the global markets. However, the markets are also doing really, really well despite, any potential political election volatility. And, the next point that we see will probably be the Eurozone. I think the Eurozone is also definitely going through their own political dynamics. We know that later in the year, the big boy in the United States will also go through, their own political dynamics. And I don't know if you maybe have a view on, maybe on the Eurozone or global markets at large.
You're correct in that front. The euro is going through some stuff. Good news last week, we did see our first cut out of the G7 in terms of interest rates, with the Eurozone cutting their interest rates that side. They have done a very good job when it comes to cutting inflation. If you look at the Eurozone, they were once upon a time, 2 years ago, at close to 10%. Now they've gone all the way back to 2%, which is the target. Close to 2% rather, which is the target. And right now, politically speaking, the biggest fish is the UK. Now, the UK has had a fair share of issues and troubles. When we look at, they've gone through 3 prime ministers, and that's been an issue on their front. So stability on that end was key. They also cut a lot of spending in services job or the public sector. So that also hurt the economy quite a bit. But now they did also touch a technical recession, but they've yet bounced back. And if we look at this morning, we also saw that they have reached 2% in terms of inflation rate on the UK front. Now, their election is coming in a few weeks' time, if I'm not mistaken, 4th of July. So that's a bit further down the line, and they're starting to campaign. Many of their campaigns are saying that they are looking to raise taxes, and that's because of this cut in this expenditure. But looking at the economy, if you look at the UK in particular, they reached all-time highs not so long ago in May. So the economy has also been performing quite well. Now with this inflation rate number coming out, The next look is then what is the Bank of England going to say? And that's going to be only announced tomorrow, or which is the 20th of June. That's going to be the interest rate decision. And right now, currently, we are looking at a possible unchange, or it's going to stay as is. However, the inflation rate number coming out today has been good. So we could see a different split in the votes. Last time we had 7 to 2, so 7 saying that they would like the rates unchanged, 2 saying that they want their rates changed to a cut. So they're still looking, it could see a bigger swing towards the votes to having the interest rate cut, but only time will tell on that front. But more to your point, international markets are showing now that there is strength in the economies. If you're looking at labor, for example, we are seeing stronger labor forces across the globe. United States, we touched on as well. The tech industry and the S&P 500 yesterday also touching all-time highs. So on a global stage, as much as there is this much uncertainty, the positive is looking like the markets are doing quite well, bouncing back from that high interest rate, high inflation rate numbers that they had in 2 years ago.
It's interesting that if we look from economic policy and monetary policy perspective, right, we would have, or at least in my own personal capacity, watching what's been happening with the global economy, is that I would have actually thought that we're on the brink of a repeat of 2007, 2008 financial crisis. But it seems that as much as there's been all this volatility, I think individuals, as the basis of, most economies, have maybe learned from the past, and they have actually defied the odds. If you're looking at the US, for example, when we thought we are going to, the theme was recession, and we never saw recession. And if we look, bringing it back locally, is that some of the results have really been fascinating on the JSE, especially the top 40 shares, and that I would have been of the thought that under the strenuous circumstances that we were operating in, then we added the political element to it, everything was seemingly doom and gloom. Yes, there have been a lot of dips in the market, but we are hopefully turning the tide, and fortunately we have managed to stay strong under the circumstances.
100%. And as you say, on the local front, you might want to touch on some banks. If you look at the banks, they've had a record number in terms of people paying interest, income coming from interest. That has been good on their front, but what I've also seen quite interestingly has been, if you look at something like the retail sectors, your Mr. Prices, your the Fushini Group, if you look at their latest results, they also show that despite slight or modest growth, single-digit growth, they have had higher people paying off their debt. And I think on the consumer side, we are seeing more financial savvy consumers where they are not getting into much more debt. And I think with the high interest rate and also inflation rate, perhaps we aren't seeing more people getting into more debt, rather they are now settling the debt that we currently have.
No, 100%. And then from your side, just speaking on the Rand, do you think we are going to see further strength in the Rand?
That is a very interesting thing to look at. I think politics are going to have to come into play now, especially on that front. We are going to have to see what the financial minister is going to look at, what they're spending on next. Right now, I think in the last 90 days, the biggest thing that's helped us has been no more cuts or load shedding in terms of electricity, and we've also seen now a pushback against raising the tariffs on electricity. So I think that is going to help in terms of businesses staying on. Seen a lot of companies also going renewable as well, so not relying too much on that. What is quite concerning is infrastructure. If you look at the ports, that I believe is going to play a big factor. Going back to your question, do I think the rand's going to strengthen even further? Right now, going back to the hard money, I think the sentiment is pushing the rand strengthening. However, more sustainable measures have to come into play. If we look, our inflation rate has also just come out, stayed as is. So no cut really on the cards just yet on a local front. But once inflation gets under control, cuts come into play, I think it can only get better.
100%, and I think the beauty about being in South Africa currently is that we have gone through the elections, we have seen the results, the new government of national unity. I think it's going to be very fascinating to see, as much as in the Eurozone, inflation is tapering, interest rates are tapering. You did mention the point of the UK specifically having 3 prime ministers, and I also do think that they also had several finance ministers under that same topic that we're discussing. So as much as we're seeing a lot of strength in the economies locally and in Europe as well, is that it's going to be really. I'm quite happy that South Africa has gone through its elections. I'm quite happy that we are starting to see a bit of direction, and hopefully, there is a knock-on effect on the global economy, that they also find a way, a harmonious way to carry on with economic policy, because it does the greater good for the people.
100%. The saying is, when rising tides lifts all boats. And hopefully that's what we continue to see, as we are seeing all of these all-time highs across the globe. Now, as you investors and traders of Trive, what are you going to do? Open an account with Trive South Africa and Trive Africa, and give us a call on the desk, and let's have a chat.